Hello to all the students. Very good evening. How are you all doing? I believe that your examination preparation has been going really well, and these revision lectures will help you in making sure that you will attempt your exams in the most efficient way possible. Now, our revision series is going to be covering the major topics and giving you a glimpse of the entire syllabus so that you will get confidence. As in, when you watch these lectures, you will make sure that whatever that you have studied already has will come back to you, right? That is the whole intent of the revision lectures. Now, for all the chapters, we have identified that there are certain important topics and there are certain topics which we brush through. If at all you have any doubts during these revision lectures, you can put it as questions during the video, but I'll be answering it only at the end. Also, if you have furthermore doubts with regard to any specific sum or whatever it is, you can use our app, that is OneFin, and you can go to the forums and you can ask your questions and we'll be answering all those questions. Now, let us start our revision lecture without any further ado. Economics for finance, the topic itself is will give some kind of boredom. This The word economics itself will give a lot of boredom to a lot of people, right? But we must understand that economics, at least once you have gone through certain videos that we have made for economics for finance, that it is not as much as a subject that people call it boring. This subject is more interesting, it is more practical, and we have seen so many examples in the classroom. And how does this subject actually emphasizes on the practicability and how important it is as a chartered accountant, as a chartered accountant student, to learn this topic. This entire economics for finance, why learning this topic is very important. I say that as it is a last subject, right? It is a last subject that you are going to attempt during your examination. It becomes much more important. Let me tell you why. Because you will be physically exhausted by writing 7 papers already. 7 papers are already done, and you are exhausted physically, mentally, and you're attempting that eighth paper, that is FM and eco, and out of that 60% is covered by FM, that is practical subject. Again a lot of mind burning experience. And after that you are coming into economics at the end for 40 marks. And usually students, what they do, they'll just refer to some short notes, they'll just go to the exam and just wing it. And just by winging it, there is nobody that who has cleared CA by just winging it, right? We have to learn subjects conceptually. We have to make sure that we know what we are writing, and that will see your answers in the examination will show what is your preparation, right? So I believe that you have already done that one level of preparation. That is why these revision lectures are there, just as a booster, right? It is like a COVID vaccine. You have already taken the vaccine, and now we are giving a booster dose to make sure that your immunity is much more high, right? So just like that, these revision lectures will help you in categorizing, in making sure that your preparation is in line with the requirements of the exam. So let us start. Now the 4 chapters, right? And in the classroom scenario, we have also told why there are 4 chapters, right? Because in the revision lectures, we won't be covering that in that much of detail. And what are the 4 chapters that we have? We have a chapter which talks about national income. We have chapter which talks about the public finance, or we call it as fiscal functions. And we have monetary policy or monetary functions that we are going to learn in the 3rd chapter, and mostly about international trade that we are going to learn in the 4th chapter, right? There are 4 different chapters, and probably we have kept a target of 4 to 5 days to complete this revision. And today we'll be covering the 1st chapter, that is national income accounting. Now, in national income accounting, we have 2 different units. First one is definitely the national income accounting is the first unit. The determination of national income is the chapter. The first unit is national income accounting, and second unit is Keynesian theory, right? And now, first let us look into the national income. What is the meaning of it, and what is it exactly, right? Why we calculate national income? If at all you have to talk about any business in general, right? Any business in general. Let us take the business, let us call the Reliance Industries, right? I want to talk about Reliance Industries. Now, first of all, to understand how big this industry is, or to understand how famous or what is their total performance, we have to look at this one figure called as turnover, right? What is their turnover? Of course, the profit and a lot of other things that we have to look at. But when you look at their turnover, you'll say, oh my God, the turnover is in thousands of crores, right? This company is really big, right? So you understand the size of this company, you understand how it has grown over the past years. Earlier, they had only few thousands of crores as turnover. Now they have lot of thousands of crores as turnover, right? You come to know that okay, the business has increased over time, right? Just like that, you do that for one business, that is fine, right? If you do that for the entire country, that is where the concept of national income will come into question, right? To understand the performance, to understand the growth of the country, it is important to calculate something called as national income. And if you look at the textbook definition, what does the textbook definition say? It says that national income is defined as the net value of all economic goods and services produced within the domestic territory of a country in an accounting year plus the net factory income from abroad. Now, the terms that I'm using here, right? The terms such as within the domestic territory in an accounting year and adding net factor income from abroad. All these things we have learned in very much detail in the classroom. I'm going to take you through all those terms so that you will be crystal clear about this concept. Now, before we jump into the usefulness of national income and all that, which are purely theory questions, which we'll be covering at the end of this revision lecture, first, let us understand what are the various methods of calculating national income. Methods of calculating national income. Now, you can do me a favor that whenever I start a small topic, right? If you know the answers already, you can put that in the chat box. You can use the live chat so that I can see like how many of you already know what you're talking about, right? So methods of calculating national income, I had told you that there are three methods, right? There is expenditure method, there is income method, and there is also product, right? There are three different methods of calculating national income. And we had also discussed why there are three methods. That gave us a concept called as circular flow of income. Circular flow of income. I told you that a simple example can tell you what a circular flow of income is, right? I grow, let us say, raw material. Let us say I grow cotton and I supply this cotton to a company which produces clothing. And once these clothes are produced, who is going to purchase it? People are going to purchase it back again. So what is happening? The money is being spent for, let us say, raw material or labor. Goods are produced later, and once these goods are produced, these goods are again exchanged for money, and money keeps rotating between people and business firms. Now, this scenario is called a circular flow of income. We say in simpler terms that there is production phase, and there is income phase, and there is expense phase, right? So production is done by who? The business firms. Income. What do you mean by income? Because you are working or you are supplying things to that business firm, it will give you money, right? So it will become your income. And once you get that income, you will spend it to buy goods and services. So this circular flow of income in an economy keeps on happening, right? And you can capture the income at any of these 3 points. It could be point 1, point 2, or point 3. If you capture it at point 1, it is going to be product method. If you capture it at income, it is going to be income method. And if you capture it at expenditure stage, it is going to be expenditure method, right? This is how we had learned why there are three different methods of calculating national income. Now, with that, I have to go to the next term, right? That is something called as measures of national income. Measures of national income. And I had also told you what is the difference between methods and measures, right? What do you mean by method? Method is the way of doing something. Measure is a way of expressing something, right? For example, if you want to calculate the amount of, let us say, liquid, there are different ways you can do it, right? You can probably use a machine, or you can probably use a mug, or you can probably use a lot of different methods to calculate the quantity of liquid, right? At the same time, there are a lot of ways in which you can express the quantity of a liquid, right? You can say that there is so much ml, there is so much liters, or there are so many gallons, or there is cusecs, right? There are actually so many different ways in which you can express the quantity of a liquid. So the way of expressing is nothing but measure, right? And we had discussed in the classroom scenario that there are how many measures? There are 8 measures of calculating, or 8 measures of expressing national income, right? And what are the 8 measures? How did we divide that? We said that there is national income on top, and once there is national income, it is divided into two different segments called as gross and net. And once you divide that, it is further divided into domestic and national. Again, it is divided into domestic and national. And after dividing that into domestic and national, I further divide it into two, right? What is it? It is at market prices and at factor cost. At market price, at factor cost, at market price, at factor cost, and at market price and factor cost, right? And when you add these three things, you get 8 measures. How? Gross domestic product at market price, gross national product at factor cost, then gross domestic product at factor cost, then we have gross national income at market price, gross national income at factor cost, net domestic income at market price, net domestic income at factor cost, net national income at market price, and net national income at factor cost. So total coming together 1, 2, 3, 4, 5, 6, 7, 8 different measures of calculating national income. But when we crudely say that we are calculating national income, we are talking about NNPFC, right? That is net national product at factor cost. At factor cost. Now, if you're not very familiar with these terms yet, okay, there is a slight possibility that you might have forgotten certain things, because I know a 40-mark topic which you already have an assumption that could be boring, right? You might have not revised it properly yet. If you're not revised it properly, now it is a time to get hang of these words, because these words we are going to use it so many times, and in your exams also you need to throw these words in properly to make sure that you get good marks. Yes, I get your message, Vignesh, that it's not boring. I understand. I'm taking it. So it should not be boring, and you shouldn't be bored with the topic, because this is very important for your examination purpose. Very good. So let us go forward. Right? What do we see next? Now I spoke about so many words. I said there is gross, there is domestic, there is national, there is market price, there is factor cost. Now, just like any other measure, I took an example of liquid, right? I said liter, I said gallon, I said ml or milliliters, I said cusecs, right? These things can be converted, right, from one thing to another thing. For example, if I say 1 liter, I can also say it is 1000 ml, right? And both are same, but they are expressed in different way. Just like that, when I say gross, right, and when I say net, there is a way in which I can convert the gross into net. That's the most easiest thing that how to convert gross into net. Everybody knows. You minus depreciation. You have done it in accounts all the time, right? So gross minus depreciation will give me something called as net. That is our first conversion. Second conversion, let us talk about how to go from market price to factor cost. How to go from market price to factor cost? You have to make sure that factor cost plus net indirect tax is equal to market price. What you're adding? You're adding net indirect tax. I will write it here. Net indirect tax to the factor cost to get into what? Market price. Now, the question comes, what is net indirect tax, right? Net indirect tax is nothing but indirect tax minus the subsidy, right? When you do indirect tax minus subsidies, you will get what? Net indirect tax, and you add it to the factor cost, you will get market price. Now, let me just give you a glimpse. When I say factor cost, does it involve only cost? When I say factor cost, it involves the cost of all factors of production. All factors of production. Now, what are the factors of production? Land, labor, capital, and organization or entrepreneur. Now, what are the various costs which are paid to these people? Land will get rent, labor will get what? Wages, capital will get interest, and entrepreneur will get profit. Now, so the organization profit is already included in the factor cost when we talk about factor cost in economics, right? You have learnt about this even in your foundation, right? So I don't have to stress much about it. That is about how to convert market price into factor cost or factor cost into market price. Next, we'll go about another major, conversion formula, that is with regard to national and domestic, right? And I had told you that national is equal to domestic plus NFIA. Now, what is NFIA? NFIA is nothing but net factor income from abroad. Now, what is net factor income from abroad? Net factor income from abroad is equal to factor income earned abroad minus factor income paid, right? Factor income earned abroad minus factor income paid abroad. That amount can be either positive or it can be negative, depending upon whether you earned more or you paid more, right? So these are the things how you convert domestic into national, right? And we have also learned about how to convert market price into factor cost, and also how to convert your gross into net. We learned all the three conversion formulas. Now, understand this. In the examination, especially in the first chapter, first unit, a question is always guaranteed, right? You can get a question ranging from 4 marks to up till 10 to 12 marks also sometimes, right? Now, it has happened in the future, it has happened in the past, sorry, that 2-3 questions have been asked from this first unit itself, right? So you have to be very thorough with the calculation, and most of the sums which are there in your textbook have already been solved, and my videos are available on Indigo Learn channel, right? You can go to that chapter 1 unit 1 questions that is there under the updates which were coming last year, right? Which had come last year. We had made videos on that, and those questions are available for you on YouTube. You can go watch it anytime, and it will give you very much clarity with regard to numerics. And these numerical questions are almost certain in every exam, right? So this is one of the trick how you prepare and how you make sure that you get good marks in CA examination. If there are certain short questions which are going to come in your exam anyway, make sure that you get those marks first, right? Rather than being the a person who wouldn't concentrate much on these things, right? There are some people, what they do, they just read certain things, and they will try to cover the most of the syllabus within before that examination day, rather than focusing on this short questions. When there are short questions, you need to make sure that you get those marks no matter what. Okay, so with that, Let us go back to our original discussion. That was three methods, right? I was talking about three methods, and I just introduced you. I just told you the name that there are product method, expenditure method, and there is income method. Now let us go ahead and see what is there inside those methods as to how to calculate national income. First, we will talk about the product method, right? Product method. Product method is also called as value added method. It is also called as value added method. It is also called as industrial origin method, and it is also called as net output method. It is called as net output method. Now there are how many names? There is product method, value added method, industrial origin method, and net output method. Now why I'm focusing on this? Because tomorrow in the examination, if they say that industrial origin method, you shouldn't be surprised in the exam. Although if you look at what is given, the data what is given, you will understand that it is product method. But for a faint-hearted person, if he looks at this and industrial origin method, it sounds something different. And he will say that no, I studied only three methods: product method, income method, expenditure method, and I don't know, right? And that negativity will take away all the good things that you had in your mind that day, right? So it is very important to be prepared and to be confident. You need to know this name, right? So just know these names. Nobody will ask you the different names of the methods. You just need to identify what to do, right? So in value added method, what do we do? How do we calculate national income? Everybody knows, I'm pretty sure, that there are three steps that we follow. The step one, what is step one? Step one is identifying the producing enterprise and classifying them into different sectors. Now, how do you classify into different sectors? That classification, not now. We have learned it long back, right? We have learned it during our high school only. We were saying that our economy is divided into primary sector, secondary sector, and tertiary sector. That is already divided. So we will divide the sector. Actually, in the examination, we don't have to divide. The examiner will divide that and give it to us directly, right? In case they ask, you know what those sectors are. So I will just write it down over here: primary sector, secondary sector, and let us say service sector, right? Or tertiary sector, what you'd like to call it, right? So these things are further divided. Okay, in practically I'm talking, when you're calculating national income, probably this primary sector is further divided into 100 different subsectors, and in those 100 different subsectors we'll be doing the calculation, because as you know, the size of the economy is huge, right? We can't categorize it just on the basis of three. We will not get clarity, right? So in practically, there are hundreds or even thousands of different subsectors what we do. But theoretically, when we are doing it academically like this in the exam, we have three major sectors, that is primary, secondary, and tertiary. That is first step, that is dividing that. Usually this is done by the examiner itself, right? Examiner will give you what is the income earned or what is the value produced by primary sector, secondary sector, and service sector. You just have to do the further calculation. That will come in step two, right? What is step two? Step two is calculating something called as GVAMP. GVAMP is nothing but GDPMP, right? It's a way of expressing, because here we are doing it under value added method. We have that name called as GVAMP. That is equal to nothing but value of output minus intermediate consumption. Value of output minus intermediate consumption. Now, what do you mean by value of output? Okay, what do you mean by value of output? Very simple. Now, before that, let me give you a clarity as to why we are minusing the intermediate consumption. It's very simple. Imagine this, right? There is this company called as Tata Motors. There is this company called as Tata Motors, and there is this company called as Seat Tires, right? There is this company called as Seat Tires. Now, what does Tata Motors produce? It produces cars. Okay, many kinds of automobiles, but we'll take the example of a car. And what does Seat Tires produce? Yes, you are right. You are right. A lot of charts that I'm getting. I'm very happy that students are actively answering. Good, Mustaq. You have understood very well. Now, Tata Motors produces what? Cars. And Seat tires, of course, they produce tires, right? Now, whenever you are finding out the total value produced by these companies, of course, you will take the total value produced by Tata and you will take the total value produced by Seat. But what you have not understood here is, see, there is a car will always have tires, right? But Tata doesn't produce tires, right? They will get the tires from where? They'll get it from Seat, right? And they'll fix it here. But in the output of Seat, these tires are already recorded, right? Whenever Seat produces their financial statements, in their turnover, they have added all the tires which they have sold, whatever they have sold to Tata as well, right? So in their turnover, it is already reflected, right? It is already produced and reflected. So when Tata is recording this transaction, let us say they sold a car for 6 lakh rupees. That 6 lakh will include the cost of tires which they paid to Seat as well, right? Yes, the cost that they have paid to Seat is also considered, right? So that is where this minusing of intermediate consumption comes into question, right? Whenever Tata calculates their, let us say the GVAMP, okay, of one business, if I'm calculating the value of output minus the intermediate consumption, I will have to minus because the value of the tires has already come in another company's value of output. So I minus it to avoid the double value or double calculation, right? So that is why I minus intermediate consumption. Now the next question comes, how do I calculate value of output? That is also very easy. I had given you, it is nothing but sales plus change in stock. Now how do you calculate change in stock? How do you calculate change in stock? It is very simple. It is has to go to do only with your opening stock and your closing stock, right? You make sure that you have given the enough adjustment for your opening stock and closing stock that will become your change in stock, and that you add with your sales, you will get your value of output. In the examination, usually all this data will be spoon fed and given to you, right? You pick up any previous question paper where they have asked value added method, they have given it as a very simple problem, right? They will give you the value of output of a primary sector minus the intermediate consumption, value of output of a secondary sector and its intermediate consumption, and tertiary sector and its intermediate consumption. So it is mostly nothing but a simple arithmetic sum if you know the formula. Of course, even the service sectors are added in this, right? Service sector comes in tertiary sector, the total, right, of the service sector, and what is their intermediate consumption. Of course, even in service sector there is intermediate consumption, right? It has to be there. Next, we have to go to the third step, that is step 3. Step 3, estimation of national income. Now, when I say national income, as I said, in common parlance, when we say national income, we are talking about NNPFC, right? How to get to NNPFC? Because when we did step number 2, we got GVAMP, right? We got GVAMP, or let me write it as GDPMP, right? We got GDPMP. From GDPMP, I have to get to national income, that is NNPFC. Now, how do I get there? Very simple. From gross, I have to get to net. How do I get? Minus depreciation. From domestic, I have to go to national. How do I go to domestic? From domestic to national, how do I go? National income is equal to, I told you, conversion formula, right? Domestic plus NFIA, I will get the national. And how to get to factor cost from market price? Market price minus net indirect tax. When I do net indirect tax, I will get factor. It is as simple as that. Only 3 small calculation, and they will give you what is the depreciation. They will give you what is NFIA. They'll give you what is indirect tax, right? In that also you will have indirect tax and subsidy. In NFIA you will have factor income earned abroad and paid abroad. You know how to give that adjustments, and that's all. That is with regard to what your estimation of national income. That is going to be your step 3. So if you have done this step 1, step 2, and step 3, your problem according to value added method is solved, right? So let us go to the next method. What is the next method? What is next method? Let us take income method, right? I'm going according to the notes which I have given you, right? Even if you go to the free resources in you download OneFin app of Indigo Learn, you go to the free resources, you will get the notes of economics for finance, and in that notes in the short form I have given a lot of things, right? The entire 400 pages of institute material I have given you in a summarized way to make sure that your revision goes faster, and it is well within 80 pages, so you can go through it easily. So let us go according to that itself so that your revision becomes much easier. So even if you are a new student who is watching on YouTube, you can make sure that you download that notes and keep it in front of you so that you will get more clarity with regard to what I'm talking about, right? Because most of my students would easily get my reference when I'm talking about certain examples. I will try to be as illustrative as possible going forward. Now, income method. How do we calculate income method? Now, income method is also called as, again, the different names I should tell you. That is the factor income method, factor income method. It is also called as factor payment method, factor payment method, and it is also called as distributed share method. It is also called as the distributed share method. Now remember these names just in case the examiner asks you in different names, right? So here, what are we calculating? Simply we are calculating something called as NDPFC to make sure that national income is being calculated under income. Now why and all that we have given a very illustrative big explanation in our classroom scenario. So if I go to that, this lecture will go along for another 2 hours, right? Which we can't afford just for revision purpose. You should understand that NDPFC is calculated like this. How do we calculate? Compensation to employees, compensation to employees, plus we have something called as operating surplus. Okay, we have something called as operating surplus. Now, what do you mean by operating surplus? It is nothing but rent plus interest plus profit, right? Rent plus interest plus profit, and then you add something called as mixed income of self-employed. Now, if you don't know what is mixed income, you have to go to that YouTube videos which we have uploaded, right? In that I have explained to you what mixed income is, right? Plus net factor income from abroad. Plus what? Net factor income from abroad, and your job will be done, right? Now, the resultant measure is NDPFC, of course. Now, from NDPFC, we have to get to the national income, common parlance. What is that? NNPFC, right? So from NDPFC, we have to get to NNPFC. Now, how do we get there? Only one change we have to do. That is from domestic, we have to go to national. We know that domestic plus NFI is nothing but national. So that solves our problem, and we'll be done with what? The income method, right? So what am I doing in income method? I'm calculating. I am making sure that I make a total of all the factor incomes which are paid out by all the production units within the domestic territory of a country as wages, salaries, rent, interest, and profit. Other than these things, you can't really imagine many types of incomes. Here, all the types of incomes are covered except for the transfer payments. What are transfer payments? I have already explained to you in classroom. I will also take that up later when that comes in the second unit of this chapter, right? So let us go to the third method. Third method is called as expenditure method. Expenditure method. In expenditure method, what happens? What do we add? We add all the expenditures done by everybody, right? So that includes the consumption, which is done by the households. I add what? I add the investment, which is done by the business firms. Then I add government expenditure, which is done by the government. And then I add something called as exports, and I minus something called as imports. And this will give me a resultant called as GDP MP. And this is how we calculate the national income using expenditure method. We already know this, right? And how to calculate national income? This measure will not work. You have to get to NNPFC. You have to get to NNPFC. Now, how do you go from GDPMP to NNPFC? It's very simple. Gross, you will have to convert it to net. How do we do that? Minus depreciation, domestic to national. I have to do add NFIA, right? And from market price to factor cost, what do I have to do? Minus the net indirect. If I do these three things, I will get to NNPFC from GDPMP. Very simple, right? Next, we will learn a small concept again, right? Which was there, nominal GDP versus real GDP. Now, I'll tell you in short, because usually nominal GDP versus real GDP, in this particular exam, there is a possibility they might ask a short note on this, right? What is the difference between nominal GDP or real GDP? Or they might ask you to calculate GDP deflator or the inflation in year one or inflation in year two. That kind of a question might come, right? So what you are supposed to do? One, you understand the meaning in this revision lecture, and once you understand the meaning, I want you to go back to my lecture, which are uploaded again on YouTube, which explains in very much detail, including all the sums about nominal GDP and real GDP, which is there on Indigo Learn channel, right? Now, what is nominal GDP? Nominal GDP is the GDP which is calculated by taking into consideration the current prices, whereas the real GDP is the GDP which is calculated by taking the prices constant, which will give me more accuracy, real GDP. But which one is most usually calculated? It is nominal GDP, which sometimes might be misleading if there is a lot of inflation in the country. When, how, all those things, you can go back to that lecture and you can see that on YouTube, so that you will get complete clarity. Now, some important things. How do we calculate GDP deflator? If you are watching, you should be able to recall this immediately. It is nothing but nominal GDP divided by real GDP into 100. This is how we calculate the GDP deflator. At the same time, how do you calculate the inflation rate? Let us say that there are two different inflation rates in year one and year two, right? How do we calculate the inflation in year two? We calculate it by minusing GDP deflator in year two minus GDP deflator in year one divided by GDP deflator in year one. Just like calculating a growth rate, of course, you have to multiply that with 100 to make sure you get it as percentage, right? This is how you do. Next, let us go into some of the important terms, right? Now, you have to be in pace with me. If at all you are not in pace with me, you have to make sure that you pause the video, right? Don't be worried. You can still load all the video, and even after this lecture, it will be available on YouTube. You can watch it anytime, right? But your understanding is very important. And trust me, if you are in sync with me when you're watching this lecture, that means that you have studied really well, right? And you're able to recall most of the things. Also, if you're not able to catch up with the speed, okay, that could be because of a lot of reasons. One, might not have studied at all. In that case, you really have to get back to the books, and you have to have a complete vision before you have a revision, right? And secondly, you might have studied, but you might have studied long back, right? That is one of the reason why people won't be able to catch up in the pace, right? So, but you have to make sure that once you watch these lectures, all those memories will come back, right? So good. Let us go and learn certain terms which are there in the textbook, and I want to explain to you in very much detail. Okay, but those detailed lectures are already there on YouTube. So I will just brush through what are the various things that we have done, right? The concept of private income. Okay, what do you mean by private income, right? I had told you that to calculate private income, there are in total how many steps? Can anybody remember? There are 4 steps, okay, to calculate the private income. What is the first step? First step is calculate national income. Okay, calculate national income. Now, how do I calculate national income? You can use any of the methods, right? You can use value method, expenditure method, income method, and whatever, right? And whatever that you get, right, make sure that you convert it, right, into national income by using the conversion formula. Okay, that is our step 2. Step 2 is what? Convert that national income, because I told you in product method you get GDPMP or GVAMP, right? And in income method you will get NDPFC, right? And on expenditure method you will get GDPMP, right? By default. See, there are certain sums where you have got a different measure. Okay, I have explained that in the sums very well, right? So you have to go back to those sums and have a look at it. But usually this is a scenario, right? These are the resultants which you get from different methods, and you convert that into national income. When I say national income, I'm talking about NNPFC, right? You convert that, and conversion formulas are very clear. That is step number 2. And then there is step number 3. Okay, step number 3 is nothing but from NNPFC, I have to minus two things. Okay, I have to minus 2 things. One is income from property and entrepreneurship accruing to government sector. Okay, and also you have to minus savings of non-departmental government sector. Okay, so basically what I'm doing here, right? I don't want to go into the depth of these terms. I've already gone in depth. Okay, in that lecture it is available. So here what I'm doing, this NNPFC is there, right? When you calculate national income, it will include the income of 2 sectors. One is of private sector, one is of the government sector. I'm just removing this government part by minusing these 2 things. Okay, this is the very easier understanding. And here, what is the resultant that we get? The resultant is not private income. The resultant is the national income attributable to private sector. That is what I'm getting. You have to be very careful. When you minus the government's income from the national income, that is NNPFC, the resultant is not private income. It is national income attributable to private sector. And from there, we have step 4. From there, we have step 4. So what do we do? To this, we are going to do some adjustments in step 4. That is, we are going to add national debt interest, and we are going to also add, current transfers from government. We are going to add current transfers from government, and we are going to also add the current transfers from rest of the world. Okay, current transfers from rest of the world. When you add these 3 things, the resultant what you get is called as private income. Now, what are these 3 things? You have to go back to that lecture and see that, right? If you don't remember, if you remember, trust me, you are on track. And most of my students definitely will remember, because we have gone so much in depth in the classroom by learning these 3 things. Okay, so here that lecture is also available. I have covered these things in that update lecture which is there on YouTube. So if you still have confusion, you can go there and you can have a look at it, right? So all these transfers which are done are in net terms. Okay, that also I have explained there in the video. So private income is calculated in these 4 different steps. So let us go to the next term. The next term is personal income, right? Personal income. Isn't private income personal income? No. Private income and personal income have a difference. Now, what is that difference? Let me tell you, right? So first you calculate private income. First you calculate private income and you minus something called as corporate income tax. Okay, you minus something called as corporate income tax, and then you also minus something called as undistributed profits from companies. Okay, undistributed profit from companies, and when you do that, you will get something called as personal income. That's very interesting, right? Just imagine, I'll give you an example, right? Imagine that you are a 30% holder of a company called ABC Limited. You hold 30% of the shares, which means if they earn 100 rupees, you are going to get 30 rupees. Is it the case? Okay, let us check, right? What happens when a company earns, let us say, 100 rupees? You are a 30% holder, right? So, but when a company earns 100 rupees, first they have to pay corporate income tax, right? They have to pay income tax. Let us say it is 30 rupees, right? So what remains? What remains is 70 minus entire remaining profit. Will they give you? No, they'll retain something, right? Let us say that they retain 20, right? Every company needs a reserve to grow, right? So from 100 that is earned, 30 is removed in corporate income tax and 20 is removed as undistributed profits. Company has kept it, and personal income accruing to all the shareholders is how much? 50. In that, how much you hold? 30%. In that, how much you hold? 30%, which means your personal income here is how much? 15 only, right? This is how personal income is calculated. Now tell me, you got this 15 rupees. Whether can you spend it completely? Answer is no. Again, there is something which you pay, which is called as personal income taxes. Personal income taxes. Now, when you minus, let us say personal income tax is 1/3 or 33.33%, you will minus 5. What you'll get is 10. Now, this 15 was definitely the personal income accruing to you, right? And this 10 is something that we call as disposable income. Okay. Now, all the people who have not yet revised after studying might be remembering this stuff, right? So disposable income is calculated this way, right? So we have finished a lot of concepts here. We have finished what is private income, what is personal income, what is disposable income. Now let us go ahead and learn a little bit of theory. Okay, I will just take you through some of the theory. That is, what is system of regional accounts in India. You have to understand that when I say calculation of national income of a country, take example of our country, right? India, it is so big, so huge, right? And for a single agency sitting in central government, it is impossible to calculate the entire national income. It has to be supported by the states, and states have to be supported by district level estimates, and it has to be supported by all the lower level, the agencies. They give the aggregates to the district agencies. District agencies will give it to the state, and state will give it to the central, and that is how it is totaled, right? So that system is nothing but the system of regional accounts in India. And while calculating system of regional accounts in India, there are certain assets which are common among all the states, because see, there are so many states. Now let us say there is Karnataka, there is Kerala, there is Tamil Nadu, and there is Maharashtra, right? Now all the states calculate their state GDP or state national income, but through all the states there is something called as a central railway, right? Central railway service which runs. Now this railway income which is generated in the states, this doesn't belong to any of the states. Why? Because it is a central service, it has to be centrally calculated, right? So there are, whenever we calculate the state income estimates, certain activities are excluded. with these sectors such as these railways, or let us say banks which belong to central banks, right? These cannot be attributable to a single state. It has to be taken at a whole, at a country level. Okay, so these sectors are called as supra-regional sectors, and they're excluded while calculating the state income. Now, why I named it? Because there is a possibility that in the examination they might ask you what are supra-regional sectors, okay, and you should be able to answer it. Okay, now next we will go into some of the limitations of calculating national income. What are the various limitations, which are there, right? Uh, Limitation, the first of all, you have to understand that whenever there is more than 3, 4, 5, 6 methods and 8 measures of national income, 3 methods and 8 measures of national income, there is no agreed definition of national income. Some economists are in favor of product method, some economists are in favor of income method, expenditure method, and so on and so forth. So there is no agreed definition of national income. That is a point number one. And point number two is that there is no accurate distinction between final goods and intermediate goods. That is also not possible. I explained to you, right? And then there is issue of transfer payments. What are transfer payments? Now is the time. Transfer payments are the payments which are made by the government, for which in return there is no goods or service which is received. Okay, for example, if government gives you scholarship because you studied really well, right? But there is nothing directly received by the government by paying you money, right? These kind of transfers are called as transfer payments, and there is a difficulty in incorporating this entire national income calculation. Also, there is a matter that there is a parallel economy in countries such as India, where certain parts of the economy is run only by cash, right? Hence that income is never recorded in the national income calculation. So these are certain limitations and challenges. And we have also covered something called as GDP and welfare, right? A short note can be asked. I have given in very short form in my short notes, right? So you can go through that and you can make sure that you will write the exact same thing what I have given in the short notes in the examination. You will get complete, no doubt about it. I have just taken all the points from the textbook and I have made sure that I have given it in a simple form, right? So this, we will come to the end of our unit 1 of chapter 1 revision. Okay, so what you have to do, you have to make sure that you watch that problems video which we have put on Indigo Learn channel on YouTube, and with that you'll have complete clarity. Okay, so now what we have to do, we have to go to the second unit of chapter 1, right? So it will take another quite some time, that is around 30 to 40 minutes to finish the revision of the second unit. So energize yourself and make sure that you will have that notes in front of you whenever I am giving reference to it, right? So okay, a question has come to explain about economic bads. Okay, what are economic bads, right? Does anybody have an idea about economic bads? What is it? Economic bads are not calculated, right? Economic bads are not calculated while we get to the national income, right? For example, look at countries like South American countries. There are certain countries, and you might have watched a lot of web series on them and all that, right? Such as a lot of drug trade, a lot of trafficking, and a lot of other crimes which do happen. Although they are crimes and they are bad for the economy, it still runs and it still does a lot of money. But this money is never accounted for, right? Colombia, if you take as an example, a lot of trading in illegal narcotics is done over there, but this trading and the money received from the countries by trading these items is never recorded in the national income, right? So that is a challenge which is there in front of all the economies. First of all, to calculate the size of such economic bads. Okay, secondly, to mitigate that. So economic bads means these things, productions which are usually hidden from the government authorities, such as as you said, the narcotics or illegal trade, trafficking, etc. Okay, so with that, we will go into the second unit of calculating national income. second unit of determination of national income, that is Keynesian model. Keynesian model. I am using the short name, okay, for the unit. The full name for the unit is what? Full name for the unit is the Keynesian theory of determination of national income. If you have my notes in front of you, let us go through that, right? I have told about John Maynard Keynes and his greatness, how big of an economist he was, and how he has simplified and given a lot of economic concept, right? So, what are we going to learn in this unit? We are going to learn about uh, you know, uh, the two sector model, the three sector model, the four sector model, and all those things. And we will also learn an important concept called as investment multiplier, right? Okay, I will just have a look at the live chat. If there are any questions which are relevant, I will answer it. Yes, this video will be posted after live. Nothing to worry. Okay. I see that there are no relevant questions with regard to the first unit. So I will directly go into the second unit and I will, start that now. So the Keynesian theory is divided, okay, into let us say three different sectors or three different model sectors. That is two sector model, three sector model, and four sector model. Now, before I jump anywhere near that topic, we have to understand that what do you mean by equilibrium? Okay, and equilibrium is nothing but aggregate demand is equal to aggregate supply. Whenever aggregate demand equals the aggregate supply, we call that scenario as what? Equilibrium. But if you look at the textbook, right? If you go through the institute textbook, you will understand that the concept of aggregate supply is completely ignored, okay, in the textbook. It is not yet explained properly, right? Only the concentration given on aggregate demand, how to calculate it, right? Who raises demand? This is the first question I would ask you, right? Who raises demand, right? There are four different sectors which raise the demand. First one is households. Second one, business firms. Third one, government. Fourth one is foreign sector. Right? Two sector model is nothing but I calculate the demand raised by households and business firms. Three sector model is nothing but households, business firms, and government. And four sector model is nothing but households, business firms, government, and foreign sector. Right? So this is two sector model, this is three sector model, and this is four sector model. It's as simple as that. We are going to learn the aggregate demand in all these three different sectors. Right? Now, whether two sector model is practical, whether it is practical, answer is no. There is no economy in this world which exists in a two sector model. In two sector model, what happens? There are only two sectors. What are those? Households, business firms, right? So households and business firms have a relationship in two sector model. What kind of relationship? Let me explain to you, right? So instead of business firm, I will take the actual business, let us say, of a restaurant. Okay, I will take restaurant, and instead of household, I will take let us say a chef. Okay, now what does a chef do in a restaurant? Okay, chef supplies something called as his expertise in terms of what? In terms of factor input. He's the one who is supposed to cook, isn't it, in the restaurant? Because he cooks in the restaurant, what does he get from the restaurant? From the restaurant, he will get something called as factor income. He'll get salary, right? Because he cooks there. Right? Now, what happens in two sector model? Once he gets the income, he is going to give that income to restaurant. Why? Because he's hungry, right? Everybody gets hungry, right? There are only two sectors in the economy, chef and restaurant, right? You cook, they give you money. Now you give them money and they'll give you food. They'll give you food. Now this circle, right, is called as two sector model. That's why I told you practically is it possible? Just that this kind of scenario in any country, it is impossible, right? But for the examination purpose, for academic purpose, we do have this discussion, right? And you have to understand that here factor income is equal to, right, the household income, right? Factor input and its value is equal to the household income, and whatever money is received by restaurant is also same, right? And the value of goods which are given by the restaurant is also same, right? So everything here, I can put it this way: factor payments equals the household income equals the household expenditure. Everything that I get from restaurant I'm spending on food, right, is equal to the total receipts of whom the restaurant is equal to the value of home. Everything is same over here. This is why it is the most impracticable, yet for only academic purpose and understanding we do this, right? So aggregate demand in two sector model is raised by two people. Who are those? One, the households, and second one, a business firm. Or I can write it differently as households consume goods, right? And business firms invest in goods and services. Now, what do you mean by invest? It can be a fixed investment, it can be an inventory investment. Again, all these discussions we have done in the classroom scenario. So aggregate demand is equal to consumption plus investment. Aggregate demand is equal to consumption plus investment in what? In two sector model. Now the question comes, what do you mean by consumption? Okay, what do you mean by consumption, and how does consumption come into play? Okay, so I'm directly going into the concept that we have to learn, or which is very important, that is linear non-proportional consumption. Now if you have gone through the the regular classes, you know what I'm talking about, because we had divided that into three different segments. That is a linear function, linear proportional, and linear non-proportional, or curvilinear function we had learned, where I explained what is C. Okay, C is represented like this, that is A plus BY. Okay, what is A? A is nothing but autonomous consumption. Autonomous consumption. What do you mean by autonomous consumption? Let me tell you in a very simple way possible. When I say consumption, right, there are two types of consumptions. One is called as autonomous consumption, and second one is called as induced consumption. Induced consumption. What do you mean by autonomous consumption? See, now you are a student, right? Do you earn money? You don't earn money, right? So, but do you consume goods and services? Yes, right? Probably while you're watching this revision lectures, you're having a coffee, right? Now, what are you doing? You're consuming goods, right? But have you paid for it? No, somebody else paid for it, but you're still consuming it, right? So for every living being, there is some constant and there is autonomous, that is whether I earn or not, I need certain things such as food, such as shelter, right, such as clothing, right? All these things are required. Okay, you can call them as necessities as well, right? So whether you earn or not, whether you have income or not, certain things will definitely be consumed by you. That is nothing but A, right? Second one is induced consumption. What is induced consumption? The consumption which moves with the income, right? So probably when you're earning, like, once you go into articleship, if you are a direct entry student, you would know in your articleship you get money called a stipend, right? So when your stipend increases from, let us say, 5,000 to 7,500, will your spending pattern be also same? No. For the additional income, you do additional spending, isn't it? That is what this BY is representing. That is, there is a consumption which is always induced by the income that you receive additionally. Okay, so there is autonomous consumption and there is induced consumption. A certain percentage of income will be spent. And this is nothing but C. And this function is called as linear non-proportional consumption function. Okay. Do you have to remember the name of this function? Answer is no. You just have to remember the concept. And about this also, again, the videos are available on YouTube in our YouTube channel. So you can go back there and you can watch those videos. Right. So here, with that, I will go into the next concept in consumption function itself, where we had done certain calculations such as average propensity to consume and marginal propensity to consume. Marginal propensity to consume, MPC, APC, and MPC. And we had learned the formulae to calculate APC and MPC. If you remember how to calculate APC, average propensity to consume, very simple. It is total consumption divided by total income. Okay, total consumption divided by total income. And how do you calculate MPC? It is nothing but change in consumption. Okay, I'm going to use delta there, right? Change in consumption divided by change in income, right? So these are the formulas we learned for APC and MPC. And with that, we also learned another two, formulae with regard to savings. Okay, just like how there is consumption function, there is also saving function. You should understand this. If I receive 100 rupee as the revenue, what am I going to do with it? Imagine that I give you 100 rupees and that became your income. What are you going to do with it? Either you're going to consume it or you're going to save it, right? What else can you do with it? You can't eat the currency notes, right? And some people even might argue that, but from economic standpoint, right? If you get 100 rupees, there are two things you can do with it. Either you consume or you save. So if you add your consumption and savings, you will get your total income that is denoted by Y, right? So consumption we learned function, just like that there is savings function. And for saving also there is APC and there is APS, average propensity to save, and there is MPS, that is marginal propensity to save, right? What is the formula? Here it is total savings divided by total income, and here it is change in savings divided by change in income, right? So that is how you calculate the APC, MPC and APS, MPS. I need not tell you that the relationship between the consumption function and the saving function. You already know that, right? Consumption and savings equal to what? The total income which you have received. That is with regard to those formulae, right? So here, let us go into the next, the concept that we have to learn. That is what and how you determine income in two-sector model. Let us, look at it in the graph so that we will have more clarity. We will have more clarity like this, right? So I will draw an income curve. I will have income on the x-axis, and I will have, let us say, aggregate demand on the y-axis. Okay, and I'm going to draw income curve that is starting from zero. Of course, initially when you have zero money, right, you will not automatically have some money with you when you start, right? You're going to have income at zero, and it's going to go like this, up 45-degree. I call it Y. I can also write it as what? C plus S, isn't it? Because my total income, either I'm going to consume or I'm going to save. So consumption plus savings is equal to my total income. And now I also want to draw the consumption. Okay, but consumption, what is the formula? A plus BY, right? What is A plus BY? What is A? A is autonomous consumption, which means does it start at zero? It doesn't start at zero. That means when your income is zero, your consumption will not be zero. It will be more than zero. Why? Because there are certain things that you will consume anyway, right? So it starts at a point above zero, let us say here, and it moves across like this. This is C. How do I get C? C is equal to A plus BY, right? And now this is with regard to consumption only. That is the demand which is raised by the households. But there are business firms also, right? So these business firms also raise the demand, and that I will add it in terms of investment. That is, let me add a little bit of investment here. Okay, and I will get here, and from here I will draw it. Okay, so this will give me C plus I, right? I added investment to consumption and I got C plus I, and this is nothing but my aggregate demand, right? You have understood what I'm doing here, right? I'm depicting in the graph what is happening in two sector model and how income is determined there, right? So if you know this graph, you will understand most of the parts as to how to determine the income under two sector model. Now, very important part here is that your consumption plus savings, right, will also depict the income as well as aggregate supply. The reason for that is, what is your supply? Your supply is nothing but when you supply goods and services what you have produced, you are going to get the value of that output. Okay. And the entire value of that output is nothing but your income. So it is equal to Y. Y is equal to C plus S is equal to aggregate supply. We have had very lengthy discussions on this. So I'm going to just brush up on those topics, and we will get something called as equilibrium over here, right? And this equilibrium, if we connect that to the x-axis, we will get equilibrium level of income. Equilibrium level of income. Okay, this is how we determine equilibrium level of income in two sector model. Okay, and there are a lot of things in two sector model that we have done in the classroom scenario. I am not explaining that here because those videos are already available on our channel, right? That is with regard to inflationary gap, deflationary gap, because these were the things which were added last year, right? The institute revised the books and they added certain things, and all the additions are available on our channel. So in that I have explained the other concept in two sector model which come at the later stage, such as inflationary gap and the deflationary gap or recessionary gap. We have explained that in those videos. You can go and have a look at it. Now, what I want to do is, I want to take you through a concept of investment multiplier. Okay, and the calculation again is already available. So I will concentrate more into clearing your concept. Okay, that is very important. What is investment multiplier? Just let us take an example. Let us, like, just freshen up and take an example. Imagine that the government wants to build a flyover. Okay, they want to build a flyover, and they have released funds, or they are willing to spend, let us say, 10,000 crores. Okay, probably the biggest flyover, right? So 10,000 crores we are going to spend on this flyover. Now, what happens when you spend money, right? Government invested how much? 10,000 crores, right, on this project. What is going to happen? Who will get this money? Of course, either companies like L&T, right? And whether one company can take the entire thing up, they might take up, but will they do all the work? No, they will do something. They will take the contract. Let us say L&T got the contract, and L&T gave this work to 100 different subcontractors, right? So L&T is a contractor, and they give it to different subcontractors. Okay, and each one doing their own work, right? And once these subcontractors got the work, right, what are they going to do? They are going to go ahead and buy goods. What are the goods? You can call it cement, you can call it steel, and all this cement industry and steel industry got that money, right? And once cement industry got the money, right, they are going to pay for the raw materials of cement. At the same time, when steel company gets the money, they are going to pay their employees, and they are also going to pay their raw material suppliers, raw material labor interest. There are a lot of different payments. And once you pay the labor, who will get? The employee will get the money. What will the employee do? Employee spends that money in various goods and services that he wants. Probably he wants to pay his children's fees or whatever it is. So you see, who gave the money first? Money first came from central government, right? It went to L&T. From L&T, it went to subcontractor. From subcontractor, it went to cement company. From cement company, it went to laborer. From laborer, it went to for labor, which means it went to the employee. And from employee, it went to, like, let us say, vegetable store. He wanted to buy vegetable. He wanted to pay fees. He wanted to do a lot of things with that. So the money is changing hands, right? But initially, how much did you put? only 10,000 crores. But the effect of that 10,000 crores is huge, right? That is what we are talking about here. If you invest, let us say 100 rupees, that investment will not only increase the value of national income by 100, it will increase by more than 100. That is the total understanding here. That is y is equal to, when I say c plus I, when I say c plus I, if I increase the investment by little bit, the income will go more than proportional change, or income will show more than proportional change. Now, why is that? Let me explain that to you. We know what is Y, right? Total income is equal to C. What is C? C is A plus BY, right? Plus I. And if I'm adding any delta I over here, right? And this delta I will definitely change the Y, okay? Because that is nothing but the summation. But this Y is again over here, isn't it? In the form of BY, right? So it forms a loop. Okay, when it forms the loop, what happens? The total effect which is there on the income, total income, will be more. And with that, there is more than proportional change. There will be more than proportional change. And I suggest, if you are not familiar with this concept, you have to go back to my videos where I have explained investment multiplier in detail. Okay, this is with regard to the concept of investment multiplier. So with this, we are going to three sector model. Okay, now what is three sector model? I told you in the beginning when I made this, right? I told you that when there are households and business firms, it is two sector model. And when you add government, it becomes the three sector model. So what happens there? Let me explain to you with the help of a diagram. So that will give you much more clarity. Okay. So here there are business firms, and here there are households. Okay. Business firms, households, and in the middle, I will add government. Because if you have only business firms and households, it becomes two sector model. Now it becomes three sector, right? So what happens here? First of all, the households, okay, will sell their skills, okay, or the factors of production, okay, through a market which we call it as factor market. Okay, factor market. The households will provide something called as factor inputs. Okay, once the factor inputs are provided, okay, what will happen next? These factor inputs indeed will go to whom? The business firms. Okay, and business firms in turn, okay, will pay or will make factor payments through the factor market to the households. And while going to the households will get something called as personal income. Okay, whatever the factor payments which are made by the business firms to the households, it will become their personal income. Now tell me what will happen. Households will give something called as taxes, that is personal income tax, or certain taxes that households will pay to the government, and business firms also pay tax to government, isn't it? Okay, see what is happening here. Government is coming in between, and government is asking business firms, how much are you earning, right? And a part of what you're earning, I want as taxes, right? And to the households, they are talking, how much are you earning, right? The part of that you earn, you have to give me as taxes. But what will you ask next? Okay, government, that is fine. I will pay you what you're asking for, but what am I getting in return, right? So what you're getting in return, of course, the households or individuals will get something called as transfer payments or transfer payments, right? What do you mean by transfer payments? Yes, somebody has taken a rank, you need scholarship. There are certain handicapped people, they need pensions, and a lot of other payments where in return nothing is received by the government. So they will take tax from you, yes, but they will also give you something called as transfer payment. And next, what will the business firms get? Business firms also pay tax, right? So business firms will get something called as what? Subsidies. You might have heard about so many schemes. You might have learned in income tax, right? Subject, you have learned that there are so many different schemes in which government gives back a lot of things, right? When you get to see a final level, you will learn even more with regard to that, right? So government will give subsidy, right? This is how, and also there is product market. Okay, what happens in product market? One second. Please excuse my handwriting. Okay, my handwriting, whenever I'm talking fast, I write fast. Sometimes it becomes illegible. You shouldn't take that example and you shouldn't take the inspiration and do the same thing in the examination, right? Whatever you write has to be extremely legible. Okay, so that the examiner, the invigilator who is going through your answer paper will understand what you've written, right? For me, no problem as of now. As long as you understand the concept, for me, I can. Take the liberty of writing fast, and sometimes it becomes a little illegible, right? So product market. So to product market, what will the business firms give? They supply what? Goods and services. They supply goods and services, right? And these goods and services in turn are bought by households, and some of the goods and services also are bought by government, isn't it? Right? There are so many activities of the government which are solely handled by the business firms. Right? Government also takes services. For example, government offices need internet, but government doesn't produce internet. Internet they take from the private players, isn't it? So the service which is offered by business firms is taken by government as well. And at the same time, the product market, the money will come, and that money in turn will go to the business firms. Out of the money which they got, they pay certain taxes and they also pay factor payments. So this is the gist of how a three sector model looks like, and the determination of income in three sector model, and with a lot of tax adjustments and all that. Again, I suggest that you have to go to that video, the updates video which is there on YouTube. Okay, the it is under the head of May 21 amendments, if I'm not wrong, and I've explained these concepts very much in detail. And if you are revising this, it's very important that you go through that video as well. We'll make sure that the link will be put on the description or in the comment section whenever you're going through that video, so you can directly go to that video and watch it, right? So here, aggregate demand is raised by three different people, that is households in the form of consumption, business firms in the form of investment, and government in the form of government expenditure, right? So C plus I plus G. Now you should be understanding that this is nothing but this is very similar to the expenditure method of calculating national income which we had done, which indeed it is, right? So with the tax adjustments, there are certain things that you have to learn, that I suggest you that you should go through the video which I have uploaded. Okay, what happens here? Government also spends, government also pays, right? And when government takes money from you in form of taxes, what happens? Your disposable income will go further down. Let me just explain it to you for a minute, then I will give you a reference to the video which I'm talking about. See, government, right, collects tax from you, right? It collects tax from you, but it also gives you back in the form of transfer payment, right? Now, to collect tax, there are different types of collecting tax, right? We have a slab system, you have already learned in income tax, right? But there is a chance of collecting something called as lump sum tax, and the tax which changes with the level of income, that is under slab rate, whatever that we have done, right? So this lump sum tax is denoted by T bar, and the tax which changes according to the the income is also given in form of TY, okay, which is there in the video which I'm talking about, which the link will be put in the description. If I go anywhere near that topic right now, this video will extend by another 1 hour, which we can't, because this is the final deciding moments of your examination. Your examinations are coming faster than expected, isn't it? Last 2 months before, you might have been thinking about, oh, there are still 60-70 days, I will revise. But today, right, we are already in April, right? We are in the second day, and next month is your exam, and your preparation has to be much faster, and you should be able to catch up with my speed, right? So you can go to that video if you have any doubts. So I will directly go into the four sector model, right? four sector model. Okay, what is so different about four sector model? Four sector model is nothing but one more sector will be added. In household was already there, plus business firms was already there, government sector was already there. Now we are going to add something called as the foreign sector. In the foreign sector we are going to add, right? And with this what happened, let me diagrammatically explain that to you, right? Business firms, government, households, it was already there in our previous pick, right? So household supply to factor market, you have already seen that, factor market. And there is product market here, product or service market. Okay, so what will household supply? Household supply factor inputs. Okay, and these factor inputs indeed go to the business firm, and business firm gives something called as factor payments, right? And these factor payments will become the personal income of households, and out of that personal income they pay something called as taxes, and they will get something called as what? They will get something called as transfer payments. And business firms also pay taxes, and in turn they get something called as subsidies, right? Until then everything is same. And then business firms give goods and services through product market, it will be taken to the households. At the same time it will be supplied to the government as well. And then what will happen, the consumption money will come from households to the business firms, right? At the same time consumption money will also come in the form of government expenditure to product market, again which will be taken to business firms, right? This is how the usual three model sector was. And now only one thing will come extra, that thing is called as rest of world. I will write it over here in the corner, rest of world. Now from rest of world what happens, the households are going to import things from rest of the world, right? You see something very interesting, for example, yeah, you want a drone, right? You want a nice DJI camera drone. Where are you getting it from? You're getting it from US. You're going to import it, right? Or certain machinery business firm wants, it will get from where? It will get from rest of world, that is through your import channel, whatever is there. The business firms also import, the households also import, even the government imports. At the same time from the product market there are also exports which are happening, right? There are exports which will go to the from India, whatever that we produce we export it to the rest of the world. So here this is the relationship. Also, if I have to go a little bit in depth, I can tell you that from rest of the world we also get investment in the form of FDI, right? Which we will learn in fourth chapter revision, not in the first chapter revision. So here, what is happening? Aggregate demand is raised by C plus I plus G plus X minus M. Okay, now the formula of expenditure method is complete if you remember, right? So again, with regard to this, I have covered a lot of concepts such as foreign trade multiplier and rest of the things, which you can watch in the video. The link will be given in the description, right? Let us not spend much time on things which are already there, and let us concentrate only on the things which we have to go through. So here we learned two different units, that is first unit the national income accounting, and second unit Keynesian method. In Keynesian method we quickly revised three different models, that's two sector model, three sector model and four sector model. With that we also revised a concept of investment multiplier. Now these things whatever I have done in this revision class, trust me, these are the most important things for your examination purpose. Whether I'm saying that their rest of the things are not important, definitely no, rest of the things are also equally important, but these things are the must to understand the crux, okay, of the topic, right? So with this we have finished the revision of the first chapter. If there are any relevant question, I will take that up now, right? On YouTube live chat, I'm having a look. If there are any relevant questions, I will answer it. there are a lot of responses that I'm receiving, and people are answering both on YouTube as well as Zoom. So it is very good to see that you are answering all the questions. And if you have any doubts with regard to this, you can definitely ask me. And see, sometimes it so happens that you might get the doubt after, right? The live video is over. At that time, you can definitely use the comment section also. I will answer. At the same time, you can go to the forums which are provided under OneFin app, and you can put your questions there. Your questions will be answered in time, right? I will wait for 1 more minute, and after that, we will end this live. Thank you for all the appreciation which is being shown. And I don't see many questions on both places. You're welcome. You're welcome, all the students who are appreciating this live. Uh, if you have any further more questions, please do ask in the forums. We will end this live today, and we'll meet again to do the revision of the rest of the chapters. Thank you all, and study well. Don't waste your time. These times before the exams are very precious, and you have to make sure that you use it completely. Thank you. We'll see you again.